Bloomberg News.
Marc Faber is a noted investor. He correctly predicted the 1987 stock market crash earlier this month. He said the S&P 500 may rise to 1,000 by the end of July. Government spending, a big part of his reason for optimism. So now that the major banks have reported earnings and the Fed has released its methods used to conduct the stress test, we're going to check in, see what Mr. Faber thinks about stocks right now. He is joining us live from Thailand by telephone. He's the publisher, as you know, of the Gloom, Boom, and Doom report. Mark, glad as always to speak with you. Before we get to the financials and your general outlook, does the swine flu, the spread of it, change at all the optimism you have for the stock market?
Well, basically, I think the last time I was on Bloomberg was on March 6th when the S&P was touching 666. At that time, I said it's more likely that it will go up because the technicals and the internals of the market had improved substantially, and also because a lot of markets in Asia in particular didn't make new lows in March. They had made their lows between October and November of last year. So basically, I was very constructive. I thought we would have a rise to around 850, 870, and then a meaningful correction, and that the correction then should hold around the November lows on the S&P of 741, and that we could then continue to go up, not because of anything has improved, but because of money printing. We shouldn't underestimate the power of money printing in the world and of zero interest rates that central banks have implemented. So I think the swine flu
certainly still just trumps all.
I mean, the swine flu is a problem. We have, in the next 20 years, we'll have geopolitical problems, social problems, and pandemics, and that will all have a weight on asset prices. But don't forget, the more things will go bad, the worse they become, the more the money printer at the Fed, Mr. Bernanke, will print. There's no question about that. And he will print endlessly. And so even things go very bad economically, you could have essentially no revenues at companies and no earnings, and stocks would go up because of money printing.
So, Mark, just to make sure I understand, I mean, if the swine flu, if the contagion continues, you do think the Fed will come up with a way to get more money in the system?
They'll come up under any scenario that is negative to print money. In other words, to expand the balance sheet of the Federal Reserve, and the other central banks around the world will do the same. And money printing lifts all boats, some more than others.
Mark, this is Betty. I just want to jump in really quickly because we've got, of course, the GM Chrysler news out this morning. If this restructuring is successful for both companies, how much do you expect this to take off of economic growth here in the U.S., and what does that mean then for the stock markets?
Well, I mean, basically what GM is doing, namely converting debt into equity, is the way restructuring should be done. Unlike the banking system, where debts are not converted into equity, and the government, and who is the government? The taxpayer pays the bills and takes the risk. So the GM restructuring is basically good for the company, but of course bad for the existing shareholders who are diluted very badly. And also the bondholders, instead of getting interest on their bonds, now they own shares. But if the company then restructures successfully, and if a new management comes in that is capable, maybe GM can survive, and then the share price will go up 5, 10, 20 times from the present level,
Mark,
and the bondholders will be made good.
Okay, Mark, we thank you as always. Marc Faber there, the publisher of the Gloom, Boom, and Doom report.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg Radio. Copyright Bloomberg LP.